Hey guys, thanks for tuning in to Investments and Refreshments. My name is JT, and today we're going to be talking about AMC while we try this house wine limited edition rosé bubbles. This is the original house wine, carbonated wine, bright, fruity, and flavorful. House Wine will donate $2 to the Human Rights Campaign for every case of limited edition rosé bubbles sold. And we are drinking this today in honor of the Rainbow Bears. So let's jump right into the video and see what's going on with AMC. Okay, so jumping into the AMC breakdown, what we're seeing here are two graphs. One is showing the past 5 years at a weekly level, and the graph on the right is showing a 1 month breakdown at an hourly level. So this is just a lower level look at the share price for AMC. Let's jump back to the graph on the left here. And looking back, you can see that, so in 2017, you see a massive fall in the price per share. And we would like to know why. So prior to investing, some research that you might want to do is whenever you see a steep sell-off, just try and find the answer why. And sometimes trying to predict what's going to happen with a share based on the news will not work, because you can have good news and then people start selling. So we're going to look, though, because historically you can usually identify the moments when this sort of steep declines start happening. And let's pull up an article from the Motley Fool. It was posted on January 12th of 2018. And the article's title is "Why Shares of AMC Entertainment Holdings Plunged 53% in 2017. The overall idea of this article is basically that AMC acquired a few of its competitors for a combined $2.2 billion, and that's about the same amount of value as AMC shares lost in 2017. The idea is that with people watching films at home and streaming content versus going and seeing them in theaters, that acquiring your competitors and increasing your market share may not make the most sense. AMC obviously assessed the risks involved there, and they decided that it was the right time to acquire some of their competitors. Who's to say who was correct there? AMC obviously saw a massive dip in their share price through that. And what they're basically saying in the end of this article is that it's going to be difficult for AMC to recover after this massive fall in share price. So after this article was released, it was released on January 12th of 2018, you can see that AMC did start to recover, and they recovered pretty quickly back up to about $20.62. Now, this trend line is based on the peaks and valleys going back to when AMC first went public, so looking at the max. So you can see here that this was the average share price breaking down through these peaks and valleys. And through this recovery here through 2018, the share price really had hit about $20.20. From there, we saw another massive fall in share price until through the pandemic, it just accentuated the issues that AMC was facing. People weren't going to movie theaters, revenues fell, and in October of 2020, the share price was down below $3. And you can see a Quartz article here, and the Quartz article is just asking, AMC theaters are facing a dramatic cliffhanger, and the world's movie theaters are, for real this time, facing an existential crisis. What they're asking is, can AMC survive this. And they've included a chart here just showing the total US box office revenue per year. And you can see in 2020, taking into account that the pandemic definitely heavily impacted the the amount of revenue that these cinemas were taking in. You can see before that, though, the trend was actually going up. And adjusting for inflation, that might be, a little bit more flat or a downward trend. But you can see the trend here is not going to be a massive fall. But in 2020, you do see that dip, tremendous dip due to the pandemic. And if AMC goes under, we all lose. That would mean some or all of its more than 1,000 theaters across 15 countries could just disappear. So that's true. That would be horrible. And what we want to look at is just the numbers here. So by the numbers, 1.1 billion was AMC's market capitalization around this time last year. 325 million is AMC's market cap as of October 23rd. So you can see that that is obviously year over year a huge decline in market cap. Let's open back up this chart here and just see. So from the time that the Quartz article was written, you can see that the share price here has definitely risen. And that is for a couple of different reasons. Whenever Quartz released this article, that was around the same time that AMC had already acknowledged that they were having some capital issues, and without more capital, that they would be going bankrupt. So, with what was happening in Wall Street Bets decided that they were going to pick up a lot of these heavily shorted companies because people started shorting AMC because they had seen that they were having capital issues and that they might be going bankrupt. What Wall Street Bets does is that they see this and they start to squeeze. And you can see Jim Cramer acknowledge this because he makes a tweet. He says, "Thank you, but I cannot and will not foment the squeeze. I will say that AMC needs capital badly." And they did. AMC actually had acknowledged that. Now, since this squeeze has happened, AMC says bankruptcy is off the table after raising more than $900 million since December. So if bankruptcy is off the table, I believe we see this share price. And obviously, if you're going to get involved with AMC, only invest what you're willing to lose. This is not financial advice. I'm just giving my opinion. I'm just a regular guy with a computer and a glass of wine. So I would expect that the share price would have naturally, even without the squeeze, if they weren't going to go bankrupt. Now, the squeeze is obviously what's kind of driven them to not go bankrupt. You can expect, now that it's gone back down to $6.83, I would say that we expect this to rise back to about $13 naturally. And depending on over the next few years, what happens with the traffic of movie theaters, you could see that start to rise over the next few years. This might not be the worst long-term recovery play. As far as short-term, it's going to be a lot more volatile. You're seeing the AMC share price mimic the GME share price. A lot of people consider AMC kind of GME's little brother on Wall Street Bets. So a lot of the people that are involved with AMC and GME, they're going to be selling these shares at the same time, buying new shares at the same time. So you're seeing their graphs kind of follow in line with one another. And so it's hard to say what's going to happen short term with AMC, but long term, you could see this as a decent value investment. And that is my overall opinion of AMC at this time. I believe that in the next few years, it will probably start to organically rise in share price. So now that I've told you what I think about AMC, now I'm going to tell you what I think about this wine. So it's not too sweet. It's a little drier than you'd expect, which I don't hate. The bubbles are nice. It's refreshing. It's smooth, easy to drink. Overall, and given that I do love the design of the can, this is cool. I'm going to give this wine overall a 4.2 out of 5. I like it, and I would buy it again. All right, well, thank you for sticking around to the end of the video. I appreciate it. If you like this video, please give it a thumbs up. Please subscribe to the channel. That helps a lot. If you have any feedback or ideas for future videos, please leave that down in the comment section below. I appreciate that, and I'll try and answer any of those comments as they come through. All right, and I want to remind you guys to invest responsibly and only drink responsibly. All right, you guys enjoy the rest of your day. Good luck on your investments.